righty. All right, today, Thursday, December 18th. Going to be 50 degrees today here in downtown, here at the compound downtown. Story of the morning is likely Micron. Huge gap up here on earnings, currently trading 255.65. I did not even look. I didn't look at like what the numbers were. I assumed that since it's up so much this morning, literally 13, looks like about 13%. I figured it was pretty good. So, and that seems to have lifted all tides in the chips, the chips market, the bigger players that have really just have gotten pummeled here. I mean, they've really been taking them to the woodshed. But and that has actually got AMD now with a little bit of upward momentum here this morning. AVGO, Broadcom as well. NVIDIA also with a little gap up, even Intel. And then SanDisk seems to be one that's actually benefiting a little bit more so from that Micron news and earnings than anyone. That one's up about 8.5%. And then it also carried over a little more in some of the slobs, like Oracle, which has just been an absolute slob. That's up a whopping 1% or 1.5%. We have Google, Mongo, Meta, everything pretty much across the board. Even the pig Microsoft has been, that's even lifted a little bit. And so that's pretty much the story overall this morning is Micron seems to have lifted. And then if you go and look at the NASDAQ, that has lifted the NASDAQ, wrong chart. That has lifted the NASDAQ quite a bit this morning after yesterday's pretty stiff sell-off. I mean, it was a nice smooth ride up early, but they wasted no time literally taking that out to the woodshed yesterday, and we are getting a pretty nice bounce. Now, I don't know if they're going to hold on to this. I don't know if this is the makings of maybe we go all the way back. I really don't. I don't know. It really, what matters is really what happens on the open here. If they decide to sell it off on the open, who knows? We do have the makings of what appears to possibly be a sell-off, only because I'm seeing the dollar actually rally here a bit as well. So that may not bode well for the markets when we open. It looks like bonds got a little lift as well, and they seem to be at least later this week, they seem to be trending a little higher after hitting their lows down here at 14. We will see. There's a long road to hoe here in bonds, and you start looking back, and bonds look quite horrible. There's no other word for that. They look like crap. They look like crap. There's kind of a little bit of a macro overview, and then gold giving up a bit, but gold has been just an absolute powerhouse. And you can't talk about gold without talking about silver. Silver is absolutely the king of the hill right now. No doubt about it. Silver is just a absolute juggernaut here. And, I have to say, like, I look at it and I'd say rightfully so because it's more of a commercial metal than gold is, right? Gold really doesn't have a lot of commercial use. But silver, absolutely. So anyway, that's a little bit of a macro view. Oh, and I can't not complete the macro overview without a little snapshot into Bitcoin, which looks absolutely fucking awful. I mean, it's just ugh. Bitcoin looks absolutely horrific. And I think I heard something yesterday that, and I can't remember, but I remember the word broken. It looks broken. And I'm kind of down with that. It does look broken. And it's not just because it looks broken, because it's down. It just doesn't, again, there's just nothing sexy about crypto right now. Nothing. Everything that they've seemed to throw at it, they're creating ETFs. So, by doing that, they create underlying liquidity in the overall market. That has not helped. They've created different exchanges, and they're starting to come up with more derivative type products for it. The lending market for it is opening pretty rapidly, and again, it just does not seem to garner any attractive momentum. I mean, and I guess, and the word broken just makes so much sense. Now, I am just going to continue my bearish stance on this unless I'm proven absolutely wrong and it rips my face off. I mean, but if you're looking for a line in the sand, folks, this thing's got to stay over. Bitcoin's got to stay over 90K for a good month. It's got to just maintain that 90K level. And until it does that, I think you just need to put your reality glasses on and look at this. And it's going to be bearish until we hit wherever that mark is that the market feels. My feeling is it's that 70K mark. So there you have it. That is then the wrap on the more macro stuff. Oh, and what am I doing? I didn't even talk about crude oil, which is also caught a little bit of a bid, not much. I've fully disclosed I'm long crude oil here, and I'm not liking it. It's not feeling too good because it's not really working out. But, it does look like crude oil did kind of catch a bid a day or so ago, and we will see. I mean, it's off a bit today. It's back down, but we'll see what happens with that. And that is kind of it. I mean, kind of hit all the, I didn't hit the grains. Those suck anymore. I used to trade soybeans so much, and they are just absolutely fucking horrible. I don't know what they did to those markets. They suck now. They're terrible. So that's about the size of it. And then if you look at, I think another story of the day is, and it wasn't all of them, but again, the Micron news has kind of lifted these stocks, many of these AI related and uranium and, but I think the story of yesterday as well was Hut 8, which looked like it was ready to just fall into the earth. Absolutely ripped yesterday on some pretty substantial news about some data center or something. They signed some deal with some Google. I don't know the whole. Again, I don't. I'm guilty of having adult ADHD where like I'll look at something and unless it's really impressionable. So anyway, the reality is that they signed some deal with somebody for data centers down in Louisiana. It's going to be a shitload of money, and the stock went up. It was up $3.50. It looked like it was ready to just fall into the earth. I mean, if you look at this, so HUD 8, and then the other thing about HUD 8, which is interesting as well, if we were to look at HUD 8 here, volatility in here continues to stay extremely big. So be aware of that as well. Volatility in here at 81.8. And it's because of that volatility that if you have any short options like I do, you're not really seeing any real collapse. I mean, look at this. It's historically very, very high right now. This one normally runs at about 47. You know, and the fact that it was up as much as, I remember yesterday, it was up as much as 108. It has collapsed a little bit today, but volatility continues to stay bid in here. And, you know, I will be the perfect example of, I have a short put spread of 35.30 that was under a lot of pressure. And then even with that move yesterday up, I had not seen much movement in my spread. And the reason is this volatility continues to stay bid. So, and until this actually deflates, I'm not necessarily going to see much on my put spread until that's the case. So I'm out in March, so I do have some time. But I do think if you're looking for a trade, I think even today, likely, hopefully, this has a little bit of a pullback. But I still think you can do something in January. And what I like in January is I do kind of like the 35.55 or even the 60 strangle here. This is a really, really nice trade. The nice thing about HUD 8 as well is that the margins are not, I mean, look, the margins aren't great. I'll give you that. Let me make sure I'm in. Yeah. The margins are definitely not great for a $35 stock. I mean, I will give you that. But they're not horrible. But the premiums in here that you can pull down are really, really nice because of that volatility. And so that's the trade that I like. And then you could likely do this one, I believe, for probably anywhere between 390 and 395. Likely you'll get filled at 390. And so that trade I do like here in HUD 8. And the reason I kind of prefer this one over just the standard, just maybe selling puts, is I already have a short put spread. So I wouldn't want to just put a put spread on and then basically kind of pile in on one side of the trade. This gives me a little bit of, it's actually delta positive, but it does give me some negative delta up here on that 60 call. All right, and as usual, if you don't have the buying power, nice thing about HUD 8 is it does have $5 wides. You turn this into an iron condor, and you got yourself a nice little trade here that doesn't use a ton of capital. Right, $300. $327. You can likely do this for $1.70, right? Probability of profits close to 60%. Good. You're delta positive here because you're inside the you're inside here, inside the one standard. One standard deviation is down here at about 26 or so. But you're inside that. That's why you're actually a little delta positive. Again, not a big deal. Decent theta number. And you have about 29 days on this? 29 days. So nice little trade for you there on a HUD 8 as well. The other thing I like about this one too is I do think the ratio, I think a put ratio, and I would do 36, 35. The put ratio is actually a really nice trade in here for you as well. So you're going to buy 136, sell 235s. Notice I'm keeping my sells at a liquid strike, right? That's why I decided to do the sells at the 35 strike as opposed to the 36. And overall, we're under 30 on the sells, right? Is delta positive? Right? So it is, but you do have a nice cushion in this one, right? You can see you definitely have a very nice cushion. You got downside on this one to about $32, $33. And as you look at this, the wheelhouse for this would be for this to be around $35 to $36 around expiration, and that's when you're going to realize you're the most amount of profit in this. Problem with this trade, though, overall, is that you are going to have some buying power to do it. You're going to use about $1,200 worth of buying power, so just realize that. And then, obviously, your max loss is heavy because basically you're short an uncovered put. So if you have cash, if you have cash in your account, it'll be cash secured. So anyway, that is yet another one. So kind of three different ways to slice the beast here on HUD 8. The strangle, the iron condor, or the put ratio. Yeah. So, and again, the reason this one is so attractive right now is kind of a few things. It's very liquid, right? This is turning out to be an extremely liquid underlying. It only says it's 3 stars, but my experience with this, and I've been trading HUD 8 now for about 2 months, maybe 2 or 3 months, maybe 2 months. And I'm finding it to be very, very liquid, easy to get in. More importantly, easy to get out of trades. That's always a key, right? I always tell people that, look, any trade is easy as hell to get into. Again, if you're looking to buy something that's a piece of garbage and there's no market for it, and someone's offering it and you buy it at that price and it's out there, you know what? If I'm on the other side, I'm going to say, here you go. Now you own it, and when you try and sell it, and then you realize, like, hey, I'm in something that there's really no market for here. And guess what? You're not going to find anybody buying. You're going to get stuck with it. So just be aware of that. So I'm finding this to be a very, very liquid underlying. So anyway, there's that. And then also kind of sticking with this theme of these. And the reason that I'm kind of sticking with some of these underlyings here is they continue to stay bid as far as volatility is concerned. I think NBIS is still over 50, if I'm not mistaken. Yeah. NBIS is over 50. This is another one I've been trading for a couple of months, and it's turning out to be a decently liquid underlying. And you just look up and down the option chain here, and there's a lot of open interest here on both sides. It's not just calls. It's not just puts. It's both sides. But this is yet another one that I do like. Selling a little volatility here on this because this is another one that the volatility continues to stay bid in here. And in a market, now when I go in here in a volatility market where the pickings are freaking slim, right? And we've been over this one in my broadcast here quite a bit. The pickings in here suck. You know, all these underlyings, most of these underlyings in here, although they're all right, they look great on paper that, oh, hey, the volatility is high. But as far as trading them, these things, a lot of these things suck. They suck bad. And it's not just they suck the fucking big one. They are a big fat POS. And so that's why I'm sticking to these, because in a very thin volatility market, I'm going to stay where the volatility is, and I'm also going to stay a little bit where the liquidity is. So with something like NBIS, I actually like this one scarily more to the upside. Like, I'd be more apt in NBIS to do a short ratio up here, and my reasoning is there's a decent amount of a skew up here. There's definitely a decent amount. Like, look, it's not off the hook, but there is a decent amount. And just like anything, there's always normally a put skew. Call skew. It is, because, you know, more folks tend to lean to buying calls. You know, you never usually see, you know, the only time you ever see anybody who's buying puts is when they make some fucking Instagram video that, oh, look at me, I bought puts on blah, 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 blah. You know, and then they're showing you a video that they made and they recorded, you know, and that if it didn't work out, they weren't going to post it, number one. And so they're only posting it because it was something that they did and it worked out. And then it turns out, if you really look at it underneath covers, it's a fucking sim account. You know, and then those are the only times you ever see anybody buying puts and being like, I made $10,000. Like, come on, shut up. Shut up. If you did, then who cares, right? I don't care. Right? I don't care. Good for you. Congratulations. But you know, you're not making money buying puts. You know, maybe you are, and you know, but you're not doing it on a day trade most of the time, unless you catch something absolutely perfect. So anyway, that's usually why there's call skew, because most people buy calls. There's just a bigger market for the calls, just because of the strategies. Most people buy call spreads. Most people will sell covered calls. So with that, and anyway, so I kind of like a call ratio here. Now, margins in here are pretty good. And I would stick around the 95. And I would stick in January. I like this trade for a number of reasons. The margins are good, right? There's call skew, so I'm actually looking to take advantage of that. I got good theta in here. I'm basically short about 13 shares. I got a 90% probability of profit. Now, look, it says max profit 607, and I always try and tell people this, like, you ain't making $600 in this. You ain't making 600. I'm telling you, you're not. And I'm just being upfront. This one looks great on paper that way, but when you look at this on the curve, your wheelhouse for this is for this to be around 95 or $100 at or near expiration. I ain't holding this thing till expiration. I'm hoping to be out of this by next week, maybe Monday, or even tomorrow, for God's sakes. Because really, all I'm looking for this volatility to collapse a little bit. You know, maybe this thing go nowhere or even up, but maybe looking for this volatility to collapse, and then I'm going to get the hell out. But you have upside on this one all the way to 105. So you have a big runway on this. And the reason I prefer this one on this side I just don't believe unless something comes out that like really moves this stock, I just don't see it. I see a lot of resistance just from the chart at around $100. I also see a lot of resistance coming in at $92. And that's a pretty big move from 76 to 100 in less than 30 days. So, again, that's kind of why I'm looking at this from, it's not that I'm bearish on this. If I were going to, I would do this trade on the other side as well in a heartbeat. It doesn't matter, but I'm just trying to give you options. And here's something that I'm looking to do here today in NBIS. And the reason I also like this trade here today is that it's actually up a couple of bucks pre-market. So I always like to get a little on the short side when something's up, get on the little long side when something's down. So that is kind of, you could very easily do this trade on the other side on NBIS, where you would just do the put ratio. I would likely go down to the 65. This is kind of what I would do on the, on the put side. I would do the 65-60. And if you want to get aggressive, you can do the 70-65. I don't particularly like that one because I think you're a little too close to the expected move. But by all means, you could literally do this one. You do have downside in this all the way to 58. You are going to bring in $1.45. You are going to use the same amount of buying power. And it's going to give you about the same positive deltas as the other trade, but positive deltas, right? So you're going to get 12 deltas there. And so that's how I would slice it in NBIS. Either one is fine, I think. I actually just prefer the call ratio than the put ratio. Again, preference. It doesn't matter because it's basically the same trade, right? I mean, and if you really want to get fancy, do them both. If you really want to get fancy and you got the capital, do them both. I think they call it I think it's a bat wing is what I think they call that. I think that's what they've labeled that. And it's basically a double ratio. You sell the call ratio, you sell the put ratio, so it's kind of like this. It's kind of like this massive, kind of bastardized strangle in a way. I think it's a little too much. I think it's a little overkill, to be honest. I just same if you're going to do something like that, just do a strangle or something like that. But anything works. So anyway, there you go with NBIS. And as I said, I'm going to kind of stick to some of these because, and then last but not least, the one that I kind of like, and I almost bought it yesterday, I almost just bought the stock yesterday, is CCJ. I kind of like it here. It did have its fall from grace. It did look like it was going to fall through the floor. And it did have a rally, but it did kind of pull back. And right here around now, it does look like it's kind of in a spot where I think it's worth possibly getting long. Now, the problem with it is I can't really do anything in here other than like some kind of calendar spread or a call spread. Like there's not, volatility at 34.4. And then I look at this historically, it's pretty average in here. And I don't really want, and you can see it has spiked. So it does have the tendency to get much higher. I don't want to be caught in a short volatility trade on this and then have volatility spike. And that would kind of, stick it up my bingo hole, so to speak. So what I was looking to do in here, I was looking to go to March and possibly just do a calendar spread. I was looking at either the 80-85 or the 85-90. So we'll look at both. We'll look at the 80, and it would be a March, February. And this was 80.85. So very cheap trade. You're going to it's basically like buying 9 shares. You're getting about 9 deltas. Not much theta really to worry about here. I think overall, if you put this on the curve, you have it's about a 55% probability of profit on this. And then you could see pretty much the sky's the limit on this one, on where this can go. But your max profit on this, if you do hold this, the likelihood and the reason the sky is the limit with this is that you do have the ability to just kind of cash this out at some time because you're in a calendar spread, right? This is March, this is February. So anyway, cheap trade, $395. And I like this one because it's in the money, right? I kind of like that one because it is in the money, so I'm buying some intrinsic value here. Okay, and so that is like one of the trades that I like. Then also, look, if you don't want to spend that much money and you want to be a little more aggressive, just go up to the 85.90. Now, your probability is going to get hit a bit because you're actually now at or near the money, so you don't really have much intrinsic value in here. But the thing I don't like about this trade is it's not that much cheaper. It's only about $40 cheaper. And to me, it's worth the cost. It's worth that little extra money. Right? This one was $365, this is $390. To me, it's worth that little extra money to just have an intrinsic value here. And that's all. So that's what I was looking at in Cameco. Cameco. All right. And that is kind of it. Looking at some of these other ones, I'm not a fan of Oklo. I think this one's kind of a piece of shit. I think right now, I think there needs to be something else going on in here. They need a little headline news to kind of pull them out of the doldrums. I don't really see it, and so I'm kind of staying away from that one. I'm already in something here in iron. I kind of like this one here, but I would proceed with caution because it kind of looks to me that this one could go south pretty fast. So I think you need to have a pretty good, you need to have a short leash on this one because this does really look like this could literally fall off the earth pretty fast. This chart does not look good. But it's not really in a spot where I would feel comfortable shorting it. But then again, I really wouldn't want to be long. I'm already long. I'm already in something in there. I think I'm in a put spread. Yeah, I'm in a put spread that really has not done well at all. Let me see. Yeah, here it is right here. I'm in a 35.40 put spread, and I am getting absolutely smoked. And I'm in January, so I need to do something with this relatively soon. But that's why I'm saying I wouldn't really feel comfortable doing anything. IV rank 49. I don't know where that is. Historically, it's been much, much better. So I don't really care for that. I don't know if I would really want to own any options in here. There's definitely some liquidity in here. I mean, look at this 40 strike. A lot of people sitting on this 40 strike out in March. There's also a lot of people sitting on these puts at 16, at 30. So a lot of gravity all over 31, 21K here. Anyway, but it's very liquid, even for March, which is actually good. I don't know what to do in there, to be honest. And I look in there and like I already am in a position, and I try to say to myself, what do I do? Do I get myself? Do I put in some negative delta in here? I'm in January. I'd likely go to. Let's take a look at February. Do I put in some? There's definitely some call skew up here. Here's a 1 standard deviation. Do I put in some negative delta up here? That -6 delta would give me, I think, enough. Let's see. This has beta weighted. This has 20 deltas. So that really wouldn't give me enough. Let me see. I would have to come down to probably the 45 to get any. Yeah. Now that doesn't even put me there. That's only 7 deltas. I don't know. I mean, so anyway, I may actually put on a little negative delta in here just to kind of neutralize a little bit of what I have. Yeah, I mean, I might think to put on. I actually like this one better because I'm already in the. I'm already short the 40 puts. I mean, one way to play this could be to do this, is go right at the 40, 45, and that will that'll give me 10 deltas. So that would, 10 negative deltas, and that would actually put me at a positive 10 based on what I have. That may not be a bad choice. I actually like that. That's probably a pretty smart move because I'm likely going to have to, and I'm just thinking out loud, I'm likely going to have to roll that put spread out to February. I don't know. That's probably what I'm going to do, is do the 40-45. So anyway, that's basically it. And I know there's a number of news releases at 8:30. Blah, blah, blah. No news is good news. All news is news. And all news is whatever the news is. Blah, 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 blah is the way I look at it. I don't think anything news-wise is going to change what's going on here. And that's about it. So have a good trading day. I think I threw out quite a few decent things this morning. And I will be back.